of people. Okay. I might ask you why goodwill are much more important to existing shareholders as compared to the potential shareholders. You need to elaborate lah. Okay. Okay, for the rest, I just leave it to the presenters to share their thoughts and findings on their presentations. Okay, without further ado, I just pass this session to presenters to share their thoughts to all of us tonight, inshallah. Okay, presenters, are you ready now?
Yes, Doctor.
Alhamdulillah, thank you. May I know who I'm speaking with actually at this moment?
Aida Mazlinda.
Aida Mazlinda, subhanallah, it's a very clear voice from you. Okay, thank you so much, Aida. So now you can control this session and I just pass this session to you.
Okay, thank you, Doctor. Assalamualaikum and good evening to Dr. Nick and fellow classmates. We are from Group 6 are going to present a topic about impairment of goodwill comprehensive case study. My name is Aida Mazlinda binti Awang 049561 and my other 5 group member are Aina Shahira binti Muhammad Azam, Anis Zahira binti Zamri, Siti Zulaika binti Nazman, Nur Natasha Ailia Kaiza binti Abdullah and Nur Nadira binti Abdul Ghaffar. We prepare 2 videos to explain about this topic. For the first video, we will cover 5 items which is definition of goodwill, timeline of development goodwill impairment testing, impairment according to MFRS 136, how impairment goodwill occurs, and reason for impairment of goodwill purpose. Next, for the second video, we will share about calculation impairment of goodwill, how to record, and the effect on cash flow. Hope you can enjoy and understand this presentation. I will pass to Anis Zahira to share the first video. Thank you.
Definition of impairment of goodwill. Impairment of goodwill is an earning charge that is recorded by the companies when the carrying amount in financial statement exceeds its fair value. In accounting, goodwill is recorded after a company requires assets and liabilities. Goodwill impairment arises when the capabilities of required asset declines to generate cash flows and causes the fair value of goodwill become lower than its book value.
Timeline of developments in goodwill impairment testing. The objective of these amendments to ASC 350 is to simplify the process of testing goodwill for impairment. Prior to 2001, the FSB issued Statement of Financial Accounting Standard SFAS number 142 Goodwill and Other Intangible Assets, which ended the practice of amortizing goodwill over 40 years previously, and subsequently required companies to test goodwill for impairment at least annually to determine if an impairment loss exists. In June 2001, SFAS 142 also set forth a two-step test for measuring goodwill impairment. Step 1. Compare the estimated fair value of a reporting unit with its carrying value, including goodwill. If the carrying value exceeds fair value, step 2 is performed, in which the implied fair value of goodwill is compared with the goodwill's carrying value. In July 2009, SFAS 142 was superseded by ASC 350, which retained the two-step goodwill measurement process. Many companies have found that the cost and effort of this two-step process led to undue complexities and inefficiencies. In September 2011, the FSB moved towards simplifying the goodwill testing process by the entity's fair value is less than its carrying value at step 0. January 2014, the FSB amended ASC 350 to allow privately owned companies the option of amortizing goodwill over a period not to exceed 10 years. And And last, in January 2017, to further simplify goodwill impairment testing, the FSB eliminated Step 2 from ASC 350 for all private and public business entities on a prospective basis. Indication and impairment according to MFRS 136. First of all, I will explain a little bit about impairment of asset. What is an impairment of asset? An asset is impaired when its carrying amount exceeds its recoverable amount. So, in order to identify an asset that might be impaired, you have to comply with MFRS 136. You might have to perform the following procedure. First, you need to assess whether there is any indication that an asset might be impaired at the end of each reporting period. Second, if you hold some intangible asset with indefinite useful life or intangible asset not yet available for use, you need to test this asset for impairment annually. And last, if your accounting record shows some goodwill acquired in a business combination, you also need to test this goodwill for impairment annually. Indication impairment. What are the indications of impairment? There are two sources indication of information, external sources and internal sources. The impairment that might be caused by external is if the asset value has declined during the period significantly more than would be expected. Second, market interest rate on investment have changed during the period and likely to affect the discount rate of an asset value in use and the asset recoverable amount. Next, the carrying amount of the net asset of the entity is higher than its market capitalization. For indication impairment by internal sources, if there is physical damage of an asset. Also, there is internal reporting indicates that the economic performance of an asset worse than expected. And there is changes to the asset use whereas plan to discontinue or restructure the operation to which the asset belongs.
Hi everyone, I will explain about when and why impairment of goodwill will occur. So, goodwill impairment occurs when a company decides to pay more than book value for the acquisition of an asset, and then the value of that asset declines. The difference between the amount that the company paid for the asset and the book value of the asset is known as goodwill. The company has to adjust the book value of that goodwill down if it becomes impaired. Amortization or depreciation the goodwill as it would for a normal asset. Instead, a company needs to check its goodwill for impairment yearly. If the goodwill asset becomes impaired by a decline in the value of the asset below the purchase price, the company would record a goodwill impairment. This is a signal that the value of the asset has fallen below the amount that the company originally paid for it. A large amount of goodwill impairment could mean that a company is not making sound investment decisions in physical assets. Goodwill can represent a large part of a company's value or net worth. If a company doesn't test for goodwill impairment, it could overstate its value or net worth. Since goodwill is an intangible asset, treating it like a normal asset and amortizing it does not give a clear picture as to the value of the asset. It needs to be tested for impairments once a year.
Okay, now we will continue our presentation with the subtopic of reason for impairment of goodwill purpose. Impairment is an indication that the company has significantly and permanently reduced its projection for an acquisition. It was also necessary to undergo the lengthy evaluation process that can be a strongly negative signal. The kinds of triggering events that warrant an impairment evaluation are the kinds of events that can devastate a business. The example of that events are increased competition, changing regulations, and product obsolescence. Goodwill impairment is a key indicator that a significant negative event for the future of the company's business has taken place. It should not be disregarded as only a non-cash charge or an accounting event. Okay, next, for the conclusion, I have simplified all the information into a mind map so that it will be easier for you to understand this topic. First definition. Goodwill impairment is an earning charge that recorded by the companies when the carrying amount in financial statement exceeds its fair value. Next, impairment of goodwill indication. The first indication is obsolescence due to new technological changes. Next, decline in performance. Next, decline in market value of the asset. Next, changes in economy. Next, physical damage to the asset. And lastly, major restructuring. Okay, next, development timeline in goodwill impairment. It is started by goodwill amortization, followed by goodwill measurement process, followed by ASC 350, followed by ASC 350 amendment, followed by ASC 350 amendment private company option, and lastly, elimination of ASC 350. Okay, next, impairment occurred. Impairment of goodwill occurred when company pay more than book value of an asset and the value of the asset decline. Lastly, impairment reason. The reason for impairment of goodwill purpose is because impairment is an indicator that a significant negative event for the future of the company's business has taken place and it should not be disregarded as only a non-cash charge or an accounting event.
Next, for the second video, Nur Nadira will share about it.
Nadia, I cannot hear you clearly actually.
Nak tak dengar.
Yes, I cannot hear you too.
Of content that we can learn from this slide are, firstly, our calculation of impairment goodwill. The second slide that we can learn are record impairment goodwill. The third, impact on cash flow statement. And lastly, we have the conclusion. Okay, for the first slide, we have conclusion of impairment of goodwill. We see impairment when its carrying amount exceeds the recoverable amount, which is CA are higher than RA. Next, the higher of the fair value less cost to sell and the value in use. And third, for the calculation is attributable to A, proportionate share, which also known as partial goodwill, and B, fair value, that is also known as full goodwill. Now, let's look at how to record impairment goodwill. The journal entry to record goodwill impairment is debit loss, expense, or account and credit to the related assets. Next, The loss will reduce the income in the income statement, while the asset will reduce in the balance sheet.
Next, we will see how impairment of goodwill impact the cash flow statement. As the asset has never been revalued, the loss has to be charged to income. Impairment losses are non-cash expenses. They will be added back when reconciling operating profit to cash generated from operating activities. The only change would be if there was a tax impact, but impairments are generally not tax deductible. In conclusion, impairment of goodwill is not only used to reduce company asset to recoverable amount, but also to achieve result consistent with the objective of managers. Impairment of goodwill is determined by economic factors, with the exception of variation in cash flow and revenues, as well as incentive for earnings management such as change in management. That's all from our group. Thank you for your attention.
Alhamdulillah, thank you to Aida Mazina and me for a very good presentation and very good effort done on this presentation sessions. So I'm really appreciate on your effort. Uh, Actually, this particular chapter going to be repeated again on some part whenever we are going to have on earnings management discussion after this, because as you had just heard on the last part that had been mentioned by the presenters, okay, the reason of the goodwill exists in the transaction is due to the earnings management strategies engaged by the managers in the business organizations. Okay, in the next following chapter, I'm going to discuss on it in depth on how the earnings management will closely relate to the goodwill, and on how the earnings management will be strictly important to be realized either among of the potential and existing shareholders in the capital markets. So I just pass to the floor if there is any questions. Next week, we are going to continue our discussion on earnings management, and we are going to continue on some part of this chapter on earnings management chapter, inshallah. Okay?
Okay, Doctor.
Okay. Okay, I think that's all for today. Inshallah, on next week, we are going to meet again on earnings management. And for those who are going to present on earnings management, I expect you are going to have some formula about the accounting accruals and non-discretionary accruals and also discretionary accruals. Okay? Inshallah. Okay, with that, we just end our Kifarah and Salat al-As. Okay, thank you to all of you. Subhanallah, I just forgot to record our class. I'm not sure whether I can record at this moment because inshallah it's okay. Thank you to all of you, and we are going to meet again. And assalamu alaikum.
Okay, thank you, Doctor.
Thank you, Doctor.
Thank you, Doctor.